We have Bitcoin sitting at $83,000, and you're seeing a little bit more green across the board as the market does bounce. But is it just going to be a dead cat bounce? That's the question, right? We're going to have a look at that today because we do have death crosses looming across the board. And in actual fact, on some of the at least indices or indexes, we've seen that death cross already take place on the likes, for example, of Total 3 and others. So let's get straight into the show content. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. If you look at Banter Bubbles, this is what I'm talking about, double-digit gains, right? But this is, par of the course. When you do get these relief rallies, they can be extreme. And I would say this is absolutely nothing. I wouldn't even be surprised to see relief rallies in the region of triple-digit gains on some of these altcoins. You really need to see breaks of structure and for high levels to be reclaimed. And you want to look to Bitcoin as essentially your North Star for the crypto market and to give you your directional bias, because it's very, very, very rare that you'll see Bitcoin going down while the rest of the altcoins move towards the upside. I can only think of one time that's actually ever happened where Bitcoin had already topped and then the altcoins went on to have an altcoin season, and that was in 2017. And it was very short-lived. It only lasted for about 2 or 3 weeks once the Bitcoin top was in. Every other cycle, at least according to my analysis, has been met with both the Bitcoin and the altcoin top simultaneously, which is why you want to be really, really careful playing the altcoins as if it's going to be a laggard, right? You want to play the leaders and not the laggards. So the death cross, right, is looming. The cross between the 50 and 200 MA or EMA, there's slight variations between the MAs and EMAs, but nevertheless, the 50 and 200 cross on the daily, it is coming, right? It is coming. Bitcoin would probably need to rally towards about, $95,000 and hold that level to avoid this death cross on the daily time frame. We'll talk about what that means, where price is most likely to go next, and the strategy that you can use to play that, right? If you look at the at least total cryptocurrency market cap, Total 2, this is looking at the total cryptocurrency market cap minus Bitcoin. You can see we've already got the death cross, right? If we look at Total 3, which is removing Bitcoin and Ethereum, this one is also about to cross, right? So you can say that maybe Total 2 is already crossed towards the downside because of the massive bearishness that we've seen within specifically Ethereum and how poorly it's performed. And then if we look at others has also already had its death cross, and it's actually bounced already into that and rejected off of the 50. So we'll talk about this in today's show. We have had the week, we got the monthly close, the quarterly close. So we have a lot of new information which we can look at. Volumes are still relatively low. Remember, we've been tracking this chart over here, which shows the 7-day daily exchange volume, which pretty much is still just trending towards the downside, right? There's been no real movements over there. And the last 24 hours of liquidations are still hovering around that 200 million every single day, which is very low, right? It shows that there's not much money left in the market. Pretty much it's only the true degens and speculators, and it makes it a player versus player game, which means that any of the pumps that you're seeing within certain coins, so if you look at this, well up 25%, you have EOS up 17. This is just a rotational game. There's no new money that's coming into the market yet, and that's something that you do need to be aware of, right? So we're expecting for a major shift to occur within the market. We need to see a massive spike up over here in price, either to the upside or the downside, but we need to see big volatility creating a mass series of liquidations. And remember, that can be a short squeeze or a long squeeze, but those huge liquidations, when you see a 24-hour rect scale suggesting that you're looking at about like $750 to $1 billion worth of liquidations, that shows you that there's a major pivot point in the market and a transition that's taking place. So if we did see a big pump up and prices reclaim certain levels, most notably around that $92,000, $94,000 region on a closing basis. And then we got like at least a short squeeze where short traders got liquidated in the region of $750 to $1 billion. That would be a major telling sign that maybe bulls are ready to take over. Until that happens, treat it as a downtrend, which is what it is. And you can see over here, if we look at the quarterly closes on both BTC and ETH, that is officially in 11.8% down for Bitcoin, 45.41%, really significant, right? If you look at all these ETH returns, look at all the red quarters historically, right? This is actually one of the worst quarters that ETH has ever seen. So if it is going to turn green, you would want to see that do something like that very, very, very soon. And we'll talk about the possibility of a short squeeze in just a moment, right? Now, there are some inherently bearish signals, which again take time to unfold because these are high time frames. I simply just wanted to outline over here, you got your weekly MACD, which is red. You got the 2-week, which is red. You got the 3-week, which is now officially turned red. And if you actually look at this, you do get a false signal occasionally, but for the most part, once this is turned red, you do actually go into a bearish market, right? So you got a false signal over here back in 2021, which is very similar to what we're seeing now. MACD turned red, price found support on the 21 exponential moving average on the 3-week scale over here, led to the first bounce, set in a double top, and then the second time that it crossed and you lost that moving average on the 21 on the 3-week scale, you led into a bear market, right? And now you've got that cross again. This is the second time, similar to 2021, similar at least readings with the bearish divergences as well across various different time frames. So I think that'll be a major warning sign if you do start to close high time frame candles underneath that major support. That will be significant. And if you go to the monthly hasn't yet crossed, but it's getting very, very close, right? Remember the last time the monthly crossed towards the downside over here, that was essentially leading into your bear market. You went into about 9 to 12 months of downside, depending on which point you're measuring it from, but give or take a year of downside price action. So this is what you need to be very, very cautious of, right? You got all of this in combination with these death crosses between the 50 and 200 on various different time frames. So in today's session, we're going to go through how you can best play this and what you should do. How do you take advantage of this and how do you protect yourself? We'll get into that in a moment, right? Still calling for downside over here on this chart. This is still much more bearish than it is bullish, despite the wicks that started to form over here on the 5-day chart. You can see yesterday's 5-day close, which closed that 5-day candle, was very, very, very bearish, right? Which indicates that within the next 5 days, you could easily see another follow-through candle towards the downside over there. If we do get that follow-through towards the downside, we want to see our price reacts off of these support levels, and that's how it's going to line up with this death cross, which we're going to talk about again in just a moment. If we do get that on extreme negative funding, as we've discussed, it does create the possibility that if it is still a bull market, that becomes a major buy the dip opportunity, similar to FCX, USDC, DPEG, and the yen cash and carry trade unwind, which took place, right? We do have a swell of liquidations towards the upside, where if we do sell off and we find support eventually, I do think you're going to come for this liquidity, which currently is situated at $88,000. Now, taking that liquidity at $88,000, but failing to close above that level would theoretically still be a bearish signal, right? So if in the shorter term, we see a squeeze up to this and it's met with a massive wick and basically sellers step in and continue to close price below that 88K region, this is therefore still a bearish signal, right? There is always a possibility for that short squeeze. Why? Well, due to 2 reasons. Number one, we have that very, very low volume, and we haven't seen any sort of massive squeezes on both the long and the short side for quite some time. That's the one reason, right, with that low volume. And the second reason is that if you look at our liquidation deltas over here, which we drop in the Whale Room Discord, well, you can see it's pretty negative across the board, right? Which means that sellers are trying to dominate price action, and consequently, in a low volume, low liquidity environment, sometimes a market maker will come and take the side where the liquidity is the highest, and the most pain will be caused by actually taking out those short traders in the short term, right? Again, don't muddle up the various different time frames. That is in the short term. All right, so let's continue. Let's continue on over here. We'll skip that chart for now. Price right now is below all those moving averages. We do have the bear moon, which is in play, and ultimately it's still bearish. And this is kind of your next line in the sand. We covered this yesterday. We said give it a little bit more time to play out, but that was our validation zone, right? We wanted to see, if you want to get bullish again, we wanted to see price push up and reclaim the pink box, right? That was the validation zone, or invalidation if you're bearish, right? And the new zone that we can start to look at, again, it's a little bit preemptive to call this, but I think if you're treating this as your next lower high, which we've got 1, 2, 3, 4, 5 candles that rejected from there and led to the downside move, you're looking at the very, very least to sit forward in your seat and gain interest in possibly the market shifting direction. You would need to see that move above here, right? So if you do get a short squeeze and price can push up and hold above that 88K level, that starts to become a little bit promising. But for now, I still want to leave this as the key level, right? pending a change into this becoming the next key level, but it's a bit too soon, right? This could still be, intra-week chop that's playing out over here. So I don't want to call it yet, but at least I'll pay attention if you can get above that pink box, which is 88K, right? And it's interesting because it lines up with this, right? There it is. Look, that's where your liquidations are, right above that level. You could see in the short term a spike up there, but don't get trapped. That's the key thing. Don't get trapped, right? High volume still in play over here. Downtrend, lower lows and lower highs is the name of the game. It is still bearish in that regard. Now, similar to the validation or invalidation, depending on bearish or bullish, we have the same thing on the USDT dominance chart, which I would have said before, you need to break down this level for the USDT dominance to be bearish, meaning it's going to trend further down towards low levels, and that will create an upside move in the crypto market. I would like to now raise that bar to this region over here, because then you'll be breaking this upsloping channel as well, the low boundary of that channel. So we want to see a break below that, right? If you see the USDT dominance doing something like this, I would expect that simultaneously, because these charts trade inverse to one another. So if we do see that on the USDT dominance, then you probably see Bitcoin dominant or Bitcoin price pushing up like this and reclaiming, probably in the form of a short squeeze, at which point, then maybe that starts to look like a little bit of we had a low or a lower low over there, and then we put in our first high low. Low also looks a little bit like an inverse head and shoulders, and then you're starting to reclaim those levels. So that's kind of what we're watching for over here, but we still have to treat this as a downtrend until such time as something like that happens. That would be the earliest point at which you're looking to trade in the opposite direction, as opposed to trading the short side. You're then looking to trade the upside. So I would actually like to know your thoughts before we get into the whole death cross scenario over here. I'd like to know your thoughts by going through to the poll section over here. How seriously are you going to be taking this death cross? Do you think it's a bear trap? So bulls will take control again? Or do you think it's very serious, it shouldn't be ignored, prices are going to go much lower? Or are you just not sure? You're winging it, right? You're just seeing how things go. Let me know in the comments. So a bear trap would mean that it shifts everybody into a bearish mindset because the death cross comes into play. They sell their coins for price to only spike higher and continue the bull run. If you think that's the case, click on the first one. If you think it's very serious because we're going to reject off it and go lower, then click the second one. I want to see what the audience thinks. So far, only 638 of you have voted. Go through to the comment section over there, click on that vote, and we'll tally that up in the end. Now, let me share my thoughts. This is what I think, right? Okay, historically, and this works across most time frames, right? Historically, what you tend to see is, prices hovering somewhere down here, and you have these crosses about to take place, right? So you have, let's say, moving average over there. That's the 200 moving average, and then you have, or the 200 is usually trending slightly towards the upside, and then you have the 50, which is trending towards the downside. Now, usually what happens, the point where that cross takes place, right? So it's going to cross over here. Inevitably, unless price runs above $95,000, you're going to see the Bitcoin death cross. As that cross happens, most of the time, you get a pretty sizable rally directly into that cross. Now, this is the important part. This is where you want to check it, right? If that happens and price rallies into that cross and it rejects, that becomes a very, very bearish signal, right? If it rallies straight through it and reclaims it, then this is sometimes what you see, right? 200 moving averages moving up. You have price rallying like this, and you have the 50, which is coming down. If price rallies through it, reclaims the 200 like that, holds it, then usually that is where your fake outs come into play, right? And then the 50 reclaims the 200, and soon after that, you get a golden cross and price rallies towards the upside. But the problem is this. The problem is, as we've covered over here, you have these high time frame signals which are about to cross towards the downside. Now, from my experience within the crypto markets, what we've seen is that the first death cross is usually the fake out one, right? That's the one that's there to shake you out of your positions for price to only reclaim and run higher. But usually after the second, third, fourth one, that becomes a little bit more serious and significant. So if we look over here, for example, this was within this cycle over here, this was the first one, right? This was the first one that we had. Price reclaimed. You got the bull cross. Everything ran up. It was looking all hunky-dory and wonderful. And then you got the death cross over here. As you can see, as the death cross takes place, right? Price is hanging around here, which tells you inevitably you're going to get the death cross. Price rallies into it, reclaims, and that was your fake out. That's the shakeout one. And price accelerates towards the upside. And there it is, right? We came very close to creating a death cross over there, but it didn't yet happen. And then we rallied up. But now this would be the first one that is happening after such an extended move, which means you probably have to take this one a little bit more seriously. So how do you play this move? What exactly should you be doing? The way that I'd be treating this and the way that I am treating this is as such, right? If price makes its way down into these low regions, which we've been looking for, and we're looking for sharp correction, or a further correction down into that 68 to 72K region, anywhere around there into that fair value gap. Where's the fair value gap taken from? It's taken from this candle over here, right? This big abnormal candle that at least sent price towards the upside. We're looking for price to revert into that zone, which is also a clear SR flip region, which lines up. It's got a lot of confluence, right? You got your upsloping trend line over here. Let's zoom out. So let's just quickly extend this. You got your upsloping trend line over here, support, support, support. So that's touch point number one. You got touch point number two with a strong horizontal. And then we have a third confluent factor, which is the fair value gap. So it lines up as a beautiful area to buy the dip. So even if the death cross should be taken seriously, as I've been mentioning throughout the last couple of streams, I would still be looking to take advantage of that and buy the dip over here with the expectation that price is going to rally into this death cross anyway. Then the question is, this creates a big move, right? Let's quickly pull out our risk to reward tool, and it would look something like this. So if you do get the move, you could easily trade this. You'll find your invalidation based on the swing failure pattern, but this could easily be a tradable move, even if it's a worst case scenario, whereby you're going to get, let's make it nice and big for you to see exactly the numbers on screen, where you're getting a 16 to 17% move, right? And then if that death cross occurs, and this is the one that we do have to take seriously, which I do believe it is, by the way, then you would expect and see a rejection from that level. And that rejection would probably break the camel's back, as they say, and you would then follow through with losing these key levels and heading much, much lower. And then you can say, at this point in time, the MACDs on the monthly start to cross towards the downside. Remember, 3 weeks already crossed. And when we've seen this occur for the second time from such a height, we know ultimately we're going into a bear market. So I know probably not the best news that you want, but it's still tradable, right? It definitely is still tradable. So that's what I'd be looking at. And the way that I treat this is I always try and take the trade with the hopes that it can position into a new swing trade and that the bull market continues. But remember, hope is not a great strategy when it comes to these markets and making money. So you come with a trade plan, you risk X amount with a stop loss in mind to gain a certain amount. How high it goes, we'll have to reevaluate as price unfolds. And if it runs through those levels, right? So let's say we fall through, we come down into 72K support, we hold this, price rallies straight through. Am I going to close the position? No. Ultimately, I'm fluid in my decision making over here. I'm fluid. My only plan is to take the trade over here with a stop loss below, and then I'll let the market do the talking. If price rallies through this level, of course, I'm going to maintain that Bitcoin long position and continue to hold that with the hopes that we've broken structure, we've formed high lows, and we continue the bull run. And then it's playing out very, very similar to what we saw all the way back here when in August, price went down. August of last year, price went down to $49,000. And then, following that dip, how far did we run? A massive 122%, right? I'd be very, very, very happy to see something like that. But I think that this is something we do have to consider and we do have to take quite seriously, right? So that's at least the plan with regards to this death cross and what's taking place over here. And I do think the fact that if you look at some of these other time frames, or the other charts, right? You can see on total, you're already getting the death cross. The death cross is already taking place, right? So expect that there will be a rally into that. People are going to get very, very excited. Let's say you rally from here into the death cross. That's going to be a 7% move on the total cryptocurrency market cap. Let's look at total 2. This one's already crossed. Was that the rally? That already could have been the rally and rejection. Where do you start to get excited again on total 2? Well, if total 2 can start to reclaim again some of these breakdown levels, this is the most conservative level to reclaim. meaning this is your safest entry point where you can say that high probability bulls are taking back control if you can get above that level. Alternatively, if you want to be really aggressive on your take, then you can treat this as maybe the last lower high. So your aim is to break that lower high structure, right? You can see the downsloping trend line, and you got a lower high, and this is your lower high, which means you want to create both a higher low and a higher high, which means if you're aggressive, you're treating it as that. But in my experience, you're always looking for the more conservative take. Rather be a little bit late to the party than too early, and you get absolutely rinsed, right? That's my take. So this is the safe zone. Get back above there, above giving you the exact number, 1.23 trillion. That will be really, really good because you're also contending with a struggling stock market, right? The stock market is also starting to come down. So there it is, total 3, same thing, a rally into that death cross over here, and a rejection would be, you need to recover this breakdown points at 833.4 billion. And that's pretty much right where the death cross is going to take place, which is only about 5.74% away, right? So if you reject into that, it's not going to be looking good. So we can actually go back to the prior times, and here it was, right? So you got the death cross over here. You can see as the death cross took place, price rallies into it, rejects, comes down. You did actually temporarily reclaim that, and this was a big trap over here, creating a shakeout, and then it pretty much just governs price all the way down, right? Have you had any other ones within this chart? Here you got your first one, which was the fake out. There you go. That was your shakeout period, similar to Bitcoin on total 3. Rallies up. This would be your next one, which seems real, right? As per over here, the trend is your friend. The trend is your friend till the end. So stick with the trend, as Mark says over there in the chat. Others. Let's have a look at others over here. And then I also want to have a look at the stock market. So you can see others, you got your fake out over here, price reclaims, and then ultimately just governs that trend all the way towards the downside. And the same thing happened once again, right? Bearish cross, holds below, reclaims, sends up, comes into it. Look at that rejection off of the 50 EMA, right? Immediate rejection of the 50 EMA. You can look to the altcoins as well to give you a little bit of a hint as to what comes next. Because when the market positions into risk on, what you typically see is a, much bigger move and much more aggressive move in the altcoins because, of course, there's less liquidity over there. And the same is true in the opposite direction, right? When the market is turning bearish, you'd expect that the altcoins will reject first, and the altcoins will bleed out first and more aggressively mark towards the downside. And that's what we're seeing over here on the other chart. So I hate to be, no pun intended, the bearer of bad news, but that's ultimately what we're looking at. Okay, let's quickly see on the stock market. I did also want to have a look at the stock market. So let's go to that. And I'm actually curious how this one's lining up over here. So let's see the last time that this happened. This is on the daily chart for the S&P 500 futures. The last time we got a death cross was over here, right? It was in this period over here, right? Price broke down, and you can see the similarities, which I'll highlight for you now, right? You can see the similarities with this. You could easily rally back above, and then ultimately things fall through, right? So you get a big relief rally just before the death cross takes place, and then the stock market follows through with a bleed from the point of the death cross over here. Let's say from there, if you measure price action wise to the point where the low was made, it fell around another 18.45%, right? So there it is. Let's quickly highlight this for you again. So there it is. Have a look at the green, very, very, very similar price action right now. You first fall below. Here it is. You fall below over there. There we go. We've fallen below. You rally back up. You come back down for a second time. There you go. You rally back up. You come back down for a second time. You hover about. You might rally into the 200 one more time, come down for a third time, and then you might put in a bigger move. That would be the equivalent of Bitcoin going down to that 72K, rallying up into the death cross. Stock market would probably do something similar because they trade so similar. And then if you fail that level into a lower high, then ultimately that's where you're going to fall through, right? So this is the current environment, the current picture. And I think this would catch a lot of people offside because it was meant to be, the Trump era. Trump, the best president for the crypto or for markets in general. And now you have something different that's happening, right? This will catch a lot of people off guard. So I do think it's noteworthy to look at. I think that when you look at all the other corrections as well that have occurred throughout over here, you didn't get to that point where you spent this amount of time underneath the 200 EMA, right? You can see over here, you only spend small amounts of time, just a couple of days, and then you start to V-shape. That's why this was a very, very interesting relief rally, right? If we go back onto the stock market chart, we had it highlighted over here. There we go. We highlighted the significance of that 50% level. We spoke about watch for that rally into the 50% level. You know, you could find resistance anywhere here between the 0.382, the 50% level is a high probability zone. And then in an extreme extension, you're looking at that golden pocket, and we rejected over there. So let's see what happens over here with price. If it plays out like the last time, you know, you'd be looking at another move up, followed by, you know, holding that range over there. And then you might put in a bit of a bigger relief, and then you're going to start to get those crosses. The point is, which we covered yesterday, if we start to, you know, remove all the noise over here, let's just quickly see if I can remove this. 1 second, guys, 1 second. Let's see. I can't find over here to get off. But if you remove this and you simply have a look at the slope of the 200 moving average, which way is it angled, right? That 200 moving average is starting to roll over. It's angled towards the downside. Have a look at that. There it is in that box. This is beginning to roll over. So if price can't reclaim that, this is going to lead into pretty serious bearish territory. And again, just going back in time, having a look at the last time that it did that, it did start to roll over here, but then you started to rally aggressively towards the upside. We actually traded this live at the time. You can go back to my videos on that exact date if you want. Go look at the 27th of October, where we said this is a buy the dip opportunity. Right now, I'm not telling you this is a buy the dip opportunity, because I do believe it's following something much more similar to this, right? We're somewhere within this environment, most likely, and this could easily unwind like that, right? As that 200 MA starts to roll over, bots and algorithms start to kick in on the bearish side, and they become aggressive sellers because they train trading systems, right? Right. And that is going to affect crypto. Absolutely, it's going to affect crypto. Now, how would things look if crypto were to snap back into, you know, a more bullish posturing? Well, if you look at something like Ethereum, this is what I'd be focused on over here. You know, if you're looking at something like Ethereum and you're focusing on this pink box over here, this is a key SR flip region, which has now been lost, right? You can see support over there, bounces price up, comes back down, you come back, tests resistance, flips it into support, sends it towards the upside, support, sends it towards the upside, and now you've been testing that as resistance. But if you get a sizable move within the crypto markets and bulls can reclaim this, then we can consider this a deviation, and we can say, you know what, it's back on, right? It's back on. Therefore, we would need to see this reclaimed, right? Deviation, get back inside the trading range over there. We consider that a deviation. It's all about how much are you risking to get a certain reward. So the reclaim of that range level, you know, you can then place a stop loss over there, and this becomes a tradable move back towards the top, where you're getting, you know, you're around your usual 3-to-1 risk to reward ratio, which is pretty good, right? It's a worthwhile trade to take. But until you get above that, it's not worth taking, right? So if bulls can get back above 2,000 for Ethereum, sentiment can begin to shift. Sentiment is very short right now, right? We know that the fear and greed is pretty low at the moment, both on the stock market as well as crypto, but rightfully so, because the stock market is coming off of that bearish divergence on the weekly scale, and it's broken structure, and it has low volume throughout this move over here. So as price was rising, the volume remained pretty low, and that showed us there was going to be a trap, right? Have a look over here. Volume is going down. We spoke a lot about this. Price was going up, volume is going down. It told us don't trust that, right? Don't trust that move. You can see volume more recently on this little bit of a move up over here has picked up ever so slightly, but let's just watch that it doesn't just roll over again, right? If it does, again, that's going to show complacency, and then you're leading to your next move down, and we're targeting at least 5,200 for the S&P 500 over there, this is one of the easiest ways to chart Bitcoin. The same way I just told you, use Bitcoin as your North Star for the altcoins. Use the S&P 500 as your North Star for what Bitcoin is going to do, right? There's far less trappy scenarios that occur within the stock market than there is in Bitcoin, because it's much more regulated, right? So we also played this move into the 0.382 NASDAQ, specifically focusing on the tech stocks over here, which Bitcoin is going to trade most similar to. You can see, you know, you got that move exactly into the 0.382 and price rejected. So if we look at the new fib levels, ultimately you need to get above the 50% level. If you get back above the 50% level, we'll be looking good. That's 499. If you cannot get back above the 50% level, then for NASDAQ, these are going to be your major support levels, right? So first areas of interest I'd be or lining up over here is going to be into this zone, give or take. I'm going to be targeting about 50% of that wick. So I'm just going to mark it out. That would be the first area of interest, possible support over there. And then your absolute giga main area of interest support is going to be into this zone. So if you did get a severe rejection over there and you fell through, that green box is going to be significant, very, very, very significant. But what you have to ask yourself is if you do get from here to there another 14-15% drop on QQQ or NASDAQ, that's going to really affect Bitcoin, right? There's no way Bitcoin withstands that. Okay, let's quickly have a look at Tesla. How's that doing? Okay, this is officially stopped out. So yesterday, remember, we spoke about it. We took 1/3 of profits coming into the 200 MA over here, and we said raise the stops into break even. This trade is officially out. It's over. You got taken out of the rest of that position on the BTCC trade. There's a link below, by the way. If you want to trade this BTCC, go over there, click on BTCC. That's linked in the description below. They actually have a trading competition which is happening right now. You get 10% deposit on your first or bonus on your first deposit that you put in. So you put in $10,000. They'll give you $1,000, right, which you can use to trade with. And there is a trading competition taking place right now. So very, very quickly, that is where, let's go back to Tesla. That is Tesla. Let's quickly line these up. So still pretty much the same, right? I would say, if it can reclaim and start getting above 320, it might look like a high lows forming over here. But otherwise, this is a downtrend. Lower lows and lower highs, very bad. Look at that absolute clear rejection off of the 200 over there. Look at that wick over there. If we just zoom in a little bit, look at that. Pretty much strong rejection off of that level. There's a lot of work to be done over here. So the stock market is not looking very, very healthy, right? You have to be honest about this. Gold continues to soar as well. We spoke about gold a lot. We'll cover this a little bit more in the coming days and weeks. There is a TD sequential 9 top on gold on multiple different significant time frames. And if gold does form a top over there, maybe we'll see a bit of a switch within the markets. But until that happens, gold is sniffing out a crisis. It always does. And it's telling you that pressure is towards the downside for crypto as well as the equities, right? So, all right, I know it's not what you want to hear. As Wesley says over there, only player telling us the brutal truth. Guys, remember, I told you the brutal truth, my first ever time coming onto YouTube where Bitcoin was trading over here. Let's quickly go back to that. And many of you all remember this. Many of you all remember how much hate you gave me, right? Some of you out there turned from villains into fans, right? This was my first opportunity to ever be on YouTube. It was over here. Otherwise, I would have told you I was already exiting the market over here at about $53,000. And I told you we're going sub $20,000 publicly, right? Go onto YouTube, go onto this date on the 28th of March, go back in the previous streams and you'll see. I told you I'm going short over there and I'm shorting to sub $20,000. And that's exactly what we did, right? I got a lot of hate for that, but the truth does hurt, right? Because especially if it's against our bias. It's too soon for me to tell you this is absolutely 100% happening. The same way when I exited over here around that 53K level, I wasn't on YouTube yet at that point in time, so I couldn't share this. I wasn't sure that we're going into a bear market. I was just simply going risk off. So I would pretty much say that, the price action that we're seeing, that we saw back here at 53K in the last cycle is very similar to what we're seeing right now. I'm not sure that we're going into a bear market yet. I can't say, hand on my heart, this is happening. All I can tell you is that I saw signs that I need to go risk off and I need to be very, very careful. And that played out towards the downside. The point that I can tell you with certainty would be on the next pump, like over here. I could tell you with certainty we were in big, big trouble over there and we're going much, much lower. You can see over here, you started to put in a bear flag, right? There it was, a bear flag. And that's how I knew we're going in for quite a serious drop. And then you can also go back to these videos over here where we flipped long, right? I flipped long pretty much right over here between 16.8 and 17.2 just before the big move. And also over there, I wasn't 100% sure that that was the bottom and we were going into a bull market. All I knew is that it was a worthwhile trade that I absolutely had to take, right? So we spoke about this yesterday, you know, this trend line over here. This is kind of where I would become a little bit more certain. I would, again, just to emphasize, this area that I'm highlighting is kind of similar to this. I'm not sure, right? Price could easily reclaim here. If it does, I'm going long. Or price could come down into here. If it holds this, I'm also going long, and that could be support, and it could be a trap. The point that I become more certain is if we do break this level down and we start to go lower, and then we lead into a relief rally into this region over here, once again, you know, testing as some sort of underside resistance, that becomes similar to that 48K where I publicly went short all the way sub 20. Then I'd be looking for something similar, right? And then you can say that, you know, now we're in big trouble and we're going into a bear market. How low would we go? You know, I think that there would be major technical support in this $30,000 region. Now, it's too soon. I cannot make that call. All I can tell you is if we do lose those key levels, you know, major support. We spoke about the confluence of this yesterday. Why? Measured from the low to the high. This is the 50% level of the trading range that we've had. I know it doesn't look like it's halfway because of the scale that I have the chart on at the moment, but $62,892 is a significant level, right? So that's one area of interest. It lines up with this upsloping trend line. It lines up with the RSI and the weekly time frame holding that 44 region, which could, if you have a quick move down, it could still hold up, right? So these are the probabilities. This is ultimately what we're looking at over here. It's the stock market that we need to really, really be viewing. So if you do want more information on this, guys, I am dropping it, of course, you know, in my section of Whale Room. If you want to be take a more like interested approach to trading and you want to learn a lot more, everything is dropped in over here under my section, Captain's Take. Our other traders are crushing it over there as well. You have Farouk over here, who's been scalping Bitcoin 30% up on that trade. And then you can have a look over here as well. Chris doing the same thing, a lot of profitable trades. You can check out bragging rights section. Traders are making money both ways, right? So somebody actually just said that yesterday, you know, we're not bullish, we're not bearish, we're just traders looking for opportunities, both long and short. So that's from me, folks. Thank you so much for joining. I will catch you on the next one. I hope you have a great day. Stay safe out there, and cheers for now.